Hello everybody, good afternoon. Here at this Fintech Fest. It sounds a little bit like Oktober Fest in Munich, but it's not basically not the same thing. I'm very happy to be here. I'm delighted to be part of the 4th edition of the Global Tech Fest, and it's said to be the biggest conference of this kind in the world. And it's very useful that this fest brings together fintech leaders all over the globe. And Germany may be a little bit overrepresented in this session. But this is the way we learn from each other. We share experiences and get impulses for each other. With a topic like ours today, however, that does make some of sense. Setting regulatory standards for a unified framework in the financial sector, Germany at the heart of Europe as a fintech hub. Well, I admit that it's quite a mouthful and probably does nothing to dispel the stereotype of Germans' love for long words and complex sentences. We are very happy to present our fintech scene here. As a central bank, of course, we have a very particular perspective on fintechs. But anyway, I would like to give you some numbers about the fintech ecosystem in Germany. Very well being aware that the software powerhouse of the world is located here in India, and that the share of work globally is very much advanced in the tech scene and also in the fintech area, and Germany and Europe, of course, we are happy to contribute to that collaboration in fintech. Ladies and gentlemen, so first I would line out a little bit what is the state of fintech scene in Germany and Europe. Second, I would say some words on the challenges we are facing on regulating digital finance. And third, of course, modestly, how do we overcome these challenges? Right now, and central bankers, you know, they love numbers, so I start with the numbers. So right now, there are more than 1,000 fintech companies located in Germany. 7 of them are unicorns, with market values of $1 billion US. Interestingly, 5 of these 7 unicorns focus on retail businesses. For example, by offering easy and low-cost access to stock trading to a wide range of customers, or enabling customers their management of insurance services. And this market has been expanding. According to a report, the number of fintech grew in 2022 by 9%, but in 2021 it was 25%. That year too, the Startup magazine Sifted estimated that the sector has raised venture capital in a record amount of $21 billion. Interestingly, also for this overall and holistic view on the world and of its challenges, we observe that environmental, social, and government-related fintech has particularly growing in Germany. Between 2019 and 2021, the number of fintechs with an ESG reference roughly doubled, according to a study by Ernst & Young, and making Berlin, which is also my hometown, one of the places to be in the field of ESG. But Germany is not alone. We are part of the Eurozone. We are a part of a vibrant fintech scene, startup scene in Europe. Measured by market value, fintech companies are among the top 5 banking service institutions. So look at one country. So which are the top 5 institutions? And in the 7 largest European economies, already one fintech is among the 5 biggest provider for financial services. So while there is still great variance across European fintech ecosystem, this is also an opportunity, of course, to learn from each other. If every European country were to adopt best practice models, there could be the potential to grow the number of fintech jobs from 134,000 to more than 364,000, a McKinsey study estimated. Furthermore, the volume of funding could be more than doubled from 63 billion euro to 150 billion euro, and the aggregate valuation could reach almost 1 trillion euro. These figures, I think, are very interesting because they are a testament to the great potential of fintech companies' cooperation. And the same may be true for best practices here in India. So if you put all the best practices together, a great value is created. And if you put all best practices together worldwide, an even bigger value could be created across the globe. So of course, more recently, the hike in interest rate has also affected fintech companies in Germany and Europe, and I guess it's the same here in India and in other places of the world, because increased interest rates, significantly higher borrowing costs, and lower appetite for relatively risky investment opportunities have sharply reduced fintech companies' volume of funding. And of course, some business models of fintech, they do not really work well with high interest rates. However, while funding volume are still much lower compared to their records from 2021, there might be a slight upturn in investment compared to the fourth quarter of 2022. Venture capitalists have invested 3 times as much into German fintech scene in the first quarter of 2023, according to a consulting company. I expect that in the coming years, the fintech ecosystem will grow rapidly. Technology and data availability are powerful drivers, in particular in finance, and we could see that at this festival, at every stand, at every panel discussion, this was the main message. And as we experienced with ChatGPT, new applications can gain enormous traction worldwide within weeks. In the Eurozone, in particular, the introduction of a digital euro offers a big potential for fintech. Beyond the smart payment functions, which is also in the forefront for the digital rupee, as far as I understood, but beyond this simple payment function, it paves the way for conditional payments, for smart contracts, for digital assets, and for the integration of production, administration, and payments. All this requires thousands of new digital tools, intelligent networks, and platforms. So the digital euro will be at the heart of a vibrant new wave of innovation in the European fintech ecosystem. Well, that was all the promising news. Now, what challenges are we facing in regulating digital finance? That's always the hard parts of the speaks of central bankers because they have to address the risk, but ultimately it's the interest of everybody that these risks are addressed and managed. It is quite difficult to address these issues because the fintech sector is quite diverse. Fintech companies vary widely in the business models they follow, the products or services they offer, as well as the technologies they employ. Moreover, fintech companies are scaling up their businesses by going international, meaning that their operations may span across multiple countries in various jurisdictions, and I think this subject will be may take a prominent role in the following panel discussion, where we have some interesting people who are doing exactly that. Combined with the dynamic market environment where players are constantly entering and exiting the market, this presents a formidable challenge for regulators. In Germany, initially, we found the principle same business, same risk, same rule to be highly useful in dealing with many of these challenges. If you wanted to take deposits or grant loans, then you are automatically considered a credit institution and the relevant rules apply accordingly, no matter what type of player you are or what technology you employ. This allows for some flexibility to cover at least part of the fintech market. However, challenges remain. Beyond the same risks, entirely new risks evolve in the traditional financial institutions, but also in the fintech. The value chain of banking is breaking up. Fintech and big tech companies offering innovative and cost-effective solutions are taking over part of the activity traditionally assigned to credit institutions and traditionally supervised by supervisors and central banks. So, some example includes payment solutions, cloud computing, regulatory technology, but also AI and other types of algorithms. Enterprises offering these solutions do not usually qualify as credit institutions. However, when they become an integral part of a credit institution's operations, risks from these providers also become relevant to the credit institution's risk management and soundness. That consequently raises the question, how relevant should these providers be to banking supervision? Are these providers so relevant that we need to supervise them even though they do not meet the criteria for traditional supervision? With regard to cloud computing, we in the European Union have answered the question with a resounding yes. Earlier this year, the Digital Operational Resilience Act came into force. It has created a consistent set of rules for the European financial market and will strengthen its digital resilience. Moreover, it has established an oversight regime, so a separate oversight regime for critical third-party providers to finance. And then, of course, we face the challenge of regulating a new sphere that has existed outside or has come into existence outside of the traditional financial regulatory framework thus far. Crypto assets and decentralized finance, or DeFi, also very prominent during these 3 days here at the conference. Their growth has raised plenty of new questions for regulators. How do we make sure that we do not miss relevant development in this new field? What new rules do we need for crypto asset? With regard to DeFi, who should be the target of the regulation in a decentralized network? And which regulatory jurisdiction should be responsible for a decentralized network without a physical location? In the EU, we have launched ourselves into this new sphere with the markets in crypto asset regulation, which is set to come into effect next year. MiCA, so the abbreviation, will regulate providers of crypto-related services and issuers of stablecoins. In Germany, new rules of crypto custody services had already been introduced several years ago. This is, of course, a step into the right direction. However, in order to overcome these challenges, we need a truly global approach to the regulation of crypto assets and DeFi. And that brings me to my last part. How do we overcome these challenges? First, there is a tried and tested solution in finance for new challenges, and that's international cooperation. We regularly exchange data and information on relevant development in the financial sector with supervisors from other countries and closely monitor advances in international regulation. And we are very happy that the Central Bank of India, Reserve Bank of India, is a very active part in these discussions, whether it's in the Basel Committee, whether it's in the G20, whether it's in the FSB. It's a very relevant market. It's a market where lots of innovation take place, where things are scaled very rapidly. So it's a very welcomed partner in this regulatory dialogue. With regard to India, we are particularly looking at the balance that national regulation seems to have struck between implementing necessary restrictions to reduce a rising risk and simultaneously enabling innovation. Moreover, we are working as part of international committees towards setting new standards. One such international committee that acts as a standard setter in digital finance is the Basel Committee of Banking Supervision, the BCBS, where I used to be a member until March. For example, at the end of last year, the BCBS established a standard on the prudential treatment of banks' crypto assets exposure. This follows a risk-oriented approach and ensures an appropriately conservative treatment of the high-risk crypto assets. We, as Bundesbank, we very much welcome the adoption of these standards, and we also support the committee's ongoing work on crypto assets, which includes further reflections and analyses relating to a number of important elements of the standard. Committees like this are, even though they are not seen that much by the public and maybe didn't attract very much attention from you here today, but these committees, which are working not in secret but informally in private, they are invaluable for us to learn from each other, strengthen the global supervisory community, and strive towards international agreements on regulatory standards and framework. However, the fintech community should benefit too, because establishing international standards can reduce barriers and frictions when scaling up operations abroad. But the existing international bodies have their limits though. They have been set up for the traditional sectors of finance like banks, insurance or securities. And they do not cover new businesses in fintech, be it cloud, crypto, you name it. So what is needed is an international body which takes a holistic view at the new world of digital finance and start to provide global standards before all jurisdictions issue their national ones, which later need to be harmonized. Second, we are employing new solutions for new challenges as well. Supervisory tech, technology, or subtech for short. In Bundesbank, with supervisory tech, we can harness innovative technologies and revolutionize the way in which we work today. If we can collect and process supervisory granular data more quickly and easily through new technologies and analyze it with new technologies, this is a win-win situation for both us and the institutions we supervise. At the moment, most subject activities and discussions are centered around more data-driven supervision, data collection, data management, data analytics, and also data visualization are the key topics that we are currently working on in Bundesbank. One example is the use of completely new type of data, such as news articles, social media posts, geodata, which could complement the traditional data from regulatory reporting and provide additional and timelier insights. We've also started our journey towards incorporating artificial intelligence, of course, in our activities in Bundesbank. For example, we are currently testing an AI knowledge assistant. The Knowledge Assistant is a product of our innovation lab in Frankfurt and is based on open AI technology. It allows analysts to search huge sources of text for specific information in a matter of seconds. The assistant specializes in questions from the world of central banking and always provides its answers with references and sources. The assistant uses publicly available documents, including, for example, European Central Bank annual reports on financial stability, and enables our analysts to search for information in large collections of documents quickly and precisely, as well as analyze their content in a subject-specific way. In my opinion, this technology has great potential to support supervisors in obtaining quick overviews of complex situations, in particular when we can include our own data, or the data of the ECB, or the data of our sister national central banks in the Eurozone into the system. And this in real time, so supervision, and that is good news, I think, also for financial institutions and fintech. Supervision can become much more proactive, act and react in a timely manner, and not only rely on reports which, of course, are looking backwards. However, we are well aware that SupTech can only support and not replace supervisory judgment, especially in the work with growing amounts of structures and supervisory data. Ladies and gentlemen, let me conclude. I hope you found my speech much less complex than its title, and that the title may have suggested. I'm now happy to follow the debate in our panel with very distinguished panelists. Thank you very much for your attention.
Thank you so much, Dr. Wormeling, for that engrossing address on this very pertinent topic. To build the facet and detailing of this topic further, which is setting regulatory standards for a unified framework in the financial sector, with Germany at the heart of Europe as a fintech hub, we have with us our moderator and distinguished set of panel members. So I'd like to call on stage Dr. Katja Lasch, Director, DAAD Regional Office, German Center for Research and Innovation, DWIH, New Delhi, who is an expert in regulatory dynamics. And joining her on stage are going to be a stellar set of panel members, beginning with Doris Dietze, Head of Digital Finance, Payment Services and Cybersecurity, German Federal Ministry of Finance. And we also have with us Mr. Rishabh Jain, co-founder, CEO at Mewt, Ms. Seema Bhardwaj, Director, India, Germany Trade and Invest, and Yasmeen Thimiri, co-founder and CEO at MYFUNDBOX. So without further ado, I hand over the stage to our moderator, Dr. Lasch. Over to you. Please join us. Welcome.
Good afternoon, warm welcome from our side here on the panel. I'm glad to be here at the Global Fintech Festival and to have a discussion and continuing discussion on the speech of Dr. Wormeling, going a bit more on the ground level, I have to say. So let's see where regulatory frameworks are needed and how the cooperation between India and Germany in fintech can be improved and what are challenges and barriers. Global cooperation and collaboration in fintech is critical, and we've just heard that, for responsible financial ecosystems. And it has prompted authorities to consider their potential financial stability benefits, risk, and ethical regulations. And we've just heard in the speech before that there are huge challenges lying ahead us in unifying the frameworks, and to do this before the national bodies are establishing their own frameworks. So in our panel today, we have a look on cross-border cooperation in the field of fintech, focusing on Germany as an upcoming fintech hub. And Germany is currently undertaking different measures to establish itself as fintech hub in Europe. And I'm glad that on the panel we have representatives from the government, but also from startups actually, who will give us a bit of an outline. So besides regulatory initiatives, we try in Germany to attract international fintech companies and startups. And in the Indo-German corridor, there are key initiatives like the German Center for Research and Innovation, which I'm heading, who connects incubators. But we also have the German Accelerator, who supports German startups to go abroad. And Yasmeen Thimiri, who is here with us, has been part of the program. And we also have Germany Trade and Invest, who's helping Indian companies to set up their businesses in Germany. So I think we're going to have a quite interesting perspective on, first of all, what are the frameworks needed, what are the challenges, and what can be done to be closer in cross-border cooperation on a very ground level. So I would address my first question to Doris Dietze, who is from the German Federal Ministry of Finance, Head of Division for Digital Finance, Payment Services and Cybersecurity. Maybe you could give us a bit of an insight, what are the current initiatives of Germany to establish Germany as a fintech hub in Europe, and what still needs to be done that we in Europe will be more successful in attracting fintech startups and companies.
Yes, thank you very much, Katja, for the question. And first of all, thank you very much for the organizers of the Global Fintech Fest. I'm happy to participate for the second time. Last year, however, it was only virtually, so I'm very happy to be here in person today. And I'm quite impressed that India is managing this fest in the same week together with the G20 summit, which is quite impressive too. So thank you for doing so, and I wish you all the best. To your question, the German government put the fostering of digital and sustainable transformation of the economy on one of the top priority on its agenda, on its political agenda. And an innovative and attractive fintech hub is part of this agenda. And that is because we think that fintechs could contribute to innovation, to sustainable and digital transformation, and could also incentivize traditional financial actors to modernize. And therefore, for us, it is of a very much importance to have an attractive environment here for these businesses. As already mentioned, Germany is located in the heart of the European Union, and the European Union has a common market, and that is why that we, as the biggest economy in this European Union, are quite happy to provide for location from which you basically can provide your services not only in Germany, but in all other member states as well. Especially in the field of financial services, that makes sense because there we have a nearly harmonized European regulatory system. Nevertheless, we have a lot of national initiatives we have undertaken during the last 2 years to foster innovation and to make our business environment for fintechs more and more attractive. And I would like to mention 3 of them here. The first one is we set up a digital finance forum, which is a kind of expert group which advises the Ministry of Finance on fintech matters. So that is very important for us to closely interact and cooperate with the sector. And that is why we set up this forum. And this forum just recently published a roadmap this year. And in this roadmap, they set out a number of recommendations to the German government, to which they can undertake to even foster and improve the existing fintech environment. That recommendations do not only link to financial market regulation, they also include measures and recommendations how to gain talents, and to be an attractive startup ecosystem as a whole. The second initiative I would like to mention is that we are about to introduce a Financing for the Future Act, which has a lot of measures to facilitate the access to the capital market, especially for startups and SMEs, and also to foster private innovation in these businesses, in startups and SMEs. And the third point of this act is also to cut red tape, basically to make licensing processes smoother and even make communication with the financial authority possible in English. So, and the third initiative I would like to mention here is actually the European work on fintech, because as I mentioned, we are part of a European Union, and that is why it is very important for us that we closely follow and work with the European Commission. And the Commission recently, or 2 years ago, issued a digital finance strategy. And part of the digital finance strategy are the measures Mr. Wuermeling just mentioned in his statement, the framework, the regulatory framework for crypto assets, the regulatory framework for cyber resilience, but at its heart, especially the development and the regulatory framework for digital euro. So these are 3 examples. I'm happy to engage later on more of them, but as a start-off, I would leave it with that.
Yeah, thanks so much for that comprehensive overview. I think we come back to crypto a bit later, I think, in the discussion. So you might think, because Germany, you know, Seema, you're heading the Germany Trade and Invest, being responsible for attracting Indian investors, companies to Germany. And we know that in the Indian market, there's a strong focus on English-speaking countries like the UK, US, Canada, Australia, also for setting up businesses abroad. So if you would, and we are here in a fintech forum, if you would pitch for Germany as a business location in 90 seconds, what would be your elevator pitch for Germany as a fintech location, a business location to set up your fintech company in Germany?
Okay, thank you, Katja. 90 seconds. Okay, I'll start now. So first and foremost, we are talking investing in Germany. Germany is a very political stable country, which is very important for any kind of investments. We have a strong and a robust legal network, and also regulatory compliances are in place. Second, what we have is about the topic that we are the biggest economy within Europe. We are contributing almost 25% of the European Union's GDP. And accordingly, we have also 19% of the population is living within EU in Germany. This means we have the biggest consumer market. Another point which I was also highlight is regarding the workforce. So we have a highly skilled workforce in Germany, and they're highly educated. Another point which was always raised earlier was, and which we are seeing, that we have a very stable labor costs, which are now coming in Germany, also as compared to the Eastern European counterparts. Third, which I would also like to raise, is about the innovation, which is in our DNA. So if you talk about research and development, the expenditure which the German government is having, it's relatively high. Also within Europe, we are the highest who has the R&D expenditure in Germany. I'll just give you an example just to put the things in perspective, how important it is for developing the innovation. As like India, Germany is also a federal country, and we have states. So some of the federal states have their R&D expenditure, which is comparable to some of the European countries. Just to give you an example, we have state of Bavaria. Its R&D expenditure yearly is comparable, combined to that of Spain, Portugal, and Greece. So any of the fintechs and other innovative companies who are looking at Germany, they know where they're coming in and will be supported. Third point, which I would also like to highlight is, of course, which is, once again, as the topic says, we are at the heart of Europe. It is literally, we are at the heart of Europe. We are a crossroad between the east and west of Germany, on the east and west of Europe, sorry, and which makes us as the logistic hub, providing the world-class infrastructure, connecting with the 9 countries, wherein you can actually travel. Also, again, just to put the things in perspective, if you're based in Germany, you can travel within 3 hours anywhere in Europe. By road, it is 24 hours. So that's why logistically, very strategically placed there. These points geographically has already been mentioned. And once you enter a country like Germany, wherein you say soft factors and quality of life play a very important role. And this is wherein we are coming in at the light, last but not the least, that comes hand in hand. And we are actually, in most of the 5 cities which we have in Germany, they're in the top of livability index. Germany provides in excellent conditions, also for any of the companies with highly skilled population, again I mentioned, and also about the sustainability goals which we have, it's coming up. And third, so you get innovation, you get a stable country, and you tend to invest in Germany, which is supported by the innovative landscape. That's for my
Thanks so much. So excellent opportunities in Germany, and we've also heard that now we are setting up English-speaking possibilities with the financial regulatory authorities, I think, which is going to be of great help, as there's always a bit of a language barrier we are having. Maybe going from the government level a bit to the ground level, Rishabh, you're CEO of a fintech here in India, looking into SMEs, and SMEs are also really important to Germany. And I've learned in the session this morning that there are strong regulations in India, and if you make it in India, you can make it everywhere in the world, so if you overcome the regulations. So from your perspective, maybe you could give us some inputs with regard to the regulatory framework, and expanding into an international market. What challenges would you expect if you would expand into an international market as a fintech startup from your Indian perspective?
Yeah. Sure, Katja. If I would, so first of all, I would like to thank the Prime Minister and the regulatory body RBI's effort in essentially making the entire system in a way that it fosters new development on fintechs, on many fintech levels. As in the earlier sessions today, it was discussed many times that if you essentially pass the regulatory hurdles, if they are calling it hurdles, well, then it's good enough for you to essentially launch everywhere in the world. Kind of on the similar lines, I think the primary basis point for that is that with great population comes great responsibility, and that is where India is. We have to do things on a very high scale, and then essentially keeping up with the regulatory implementation of those. For example, and I think that is one of the very important points that is extremely important for Germany as well to get started in this kind of systems. For example, when we work with SMEs directly, most of the people do not understand how company laws or any of the regulations work in their hand. Now, if you move that control into a private system, then essentially whether that rule is getting followed or not, or whether the rights of the right people are getting abused or not, nobody knows about them. And that is where I think that moving this control back to people can only happen via regulations. So I think creating those values and value systems and then regulations according to keeping the right people in mind, I think that is extremely important for a new system to come up and essentially become that central fintech center for that.
Maybe one question from my side. Are you looking at the moment to go abroad, or are you still focusing on the Indian market?
Oh yeah, would definitely do. Yeah, I mean, so when we would plan to expand internationally, I think one of the interesting things that we would look at is what exactly is essentially getting changed. Like obviously there's customers and market and all of those things, like business sides, but then from a regulatory POV, we would look into what exactly need not be changed to keep the right mindset in people's head. And when you're working with an Indian, like highly regulated system, obviously those rules are already taken care of. So yeah.
Okay, good. Thanks so much. So let's come to Yasmeen. So Yasmeen is the co-founder of MYFUNDBOX, which is a German startup co-funded in TU Braunschweig. She's an Indian co-founder, and the startup has been in an accelerator program coming to the Indian market. So Yasmeen, maybe you can add on what Rishabh said from the Indian perspective. So as a German fintech startup who's looking currently to expand, and you have worldwide operations, and you look currently to expand into the Indian market, what barriers do you are facing when you would like to enter the Indian markets, and what is your approach with regard to the regulatory framework internationally, as you have some international experience?
Yeah, first I'm very thankful for the organizers to have us here, and very happy to represent MYFUNDBOX as a German startup here on the stage. Like Germany, India has set up many regulatory standards for when it comes to the fintech sector, because essentially it deals with payments and sensitive customer data and is regulated by RBI. Understanding the cultural differences and abiding by a vast number of regulations are certain barriers, or I can say challenges, that German startups face when they try to expand in India.
Okay, I've also, from the sessions today, my takeaway was democratization and access and equality for fintechs, which is a huge issue in India, it seems. Maybe Rishabh and Yasmeen, you could comment on it. So there would be a difference, as far as I would see it, between Germany and India if you talk about inclusion and democratization of fintech. Do you think that's a bigger challenge in India than it would be in Germany?
Yes, definitely. When it comes to Germany, it has a very traditional and a mature way of regulatory standards. But since India has a very tremendously growing fintech market, it needs to keep updating its regulations frequently, and that becomes quite challenging for startups like us to be in par with the regulations.
Okay, good. Thanks so much. So we come back a bit to Germany, Seema. So you mentioned all the good and fantastic general opportunities Germany has. I know that you're also responsible for the Digital Hub initiative. I find it quite interesting, which is also in the roadmap, I think. So there are at least, I think, 2 digital large hubs dealing with fintech. Maybe you could give us a brief on that and also elaborate a bit what is the international outreach of these digital hubs.
All right, so Digital Hub Initiative, just to give an idea, this initiative is started by the Federal Ministry of Economics and Climate Action. The whole background is to bring the corporates, startups, to innovate together and develop new things to digitalize. So the project all started 4 or 5 years ago, and we have 12 sector-based hubs. And you rightly indicated, we have one fintech specified in Berlin, and another one is in Frankfurt. Apart from these, which are also coming in, there are insurtechs, and which are in the Germany finance, are in Munich, Hamburg, Stuttgart, and NRW. So these are also the fintechs which are fast developing. And as Dr. Wurmeling already mentioned, there's 1,000 fintechs which are active within Germany. Half of them are in Frankfurt, and almost 1/4 is in Berlin. So Berlin is anyway a very strong hub there, and it is anyway the startup capital within Europe. So these fintechs are having different focuses. As far as you mentioned on one point was, Berlin is very much focusing on diversity and sustainability. And what now they are trying also next year, which I would like to invite all of you, they are initiating for the first time FIBE, which is Fintech Berlin, which is going to happen next year for the first time. So all the people who are here for the fintechs, and Rishabh, especially for you, we are right here to help. And so these are the hubs which we are having. And again, Frankfurt has the focus of ESG. That is a tech quartier. And this is what currently is happening in the fintech area, and we are actually looking forward to that. We have the regulators here, the ministry is here, and once it is done, we can actually connect and to help people to innovate. And also, the ideas is behind these hubs is to break the set patterns and evolve and go into new thought processes. So this is what, we have various programs. And you mentioned about internationalization. GTI has the mandate to help internationalize these digital hubs. And so we welcome the companies coming in. Normally, what we have 30% of the companies are in Frankfurt, and 10% are international companies are in Berlin. So we are looking forward to the diversity and have international companies come to us and otherwise also.
It's a wonderful opportunity to get help in soft landing and overcome regulatory issues with, which might arise in the German setup. So wonderful initiative for fintechs who would like to come to Germany, and then they can seek help from that, and that would be my understanding of it. Now, Rishabh and Yasmeen, my next question goes to you. You both work in the financial services and payment sector. If you look at the compliances into the German and Indian markets, and you have Mr. Wurmeling here sitting with us from the Federal Reserve Bank. So if you would have a wish, let's say to regulatory authorities, what would be the wish you would have to make regulations in the area more easier and more streamlined? Yes, I know there's a bit of echo here on the stage. So if you would have a wish for regulatory authorities in your specific field on payments to be more streamlined and to ease regulations, and we have here somebody from the German Federal Reserve Bank, what would be the wish you would make for streamlining and for ease of processes and regulations from your point of view as a startup?
Yeah, I think one of the, so wish would be, so I can go dreamy here, but then if I would like to dream in that kind of system, I would like to dream for a system wherein all parts of the ecosystem, so starting from just a collegial style product to all the way from fintechs to banks, and everyone are on the same page and essentially getting the same access to information. And then when we say the same access, essentially the same information is getting translated into like how exactly what it means to get implemented in that system. So if I'm a startup, working for SMEs and I'm trying to create something for SMEs in a completely different country, what would it mean for me, specifically me, to just change them and essentially getting the information right from the regulatory body rather than getting it from all the other people in the market where it becomes hearsay and different stories. I think that would be a dream yeah, there would be something to dream about, I guess.
Okay.
Yeah,
Yasmeen?
I'd like to add one point here. So when it comes to regulatory standards, I feel that a common regulatory board which standardize all the processes and also acts as a hub of reference for the regulatory framework framework for both the countries would be very good as a transition process for both startups in India and Germany as well.
Okay, good, thanks. Doris, I come back to you and to crypto. So we are on the eve of the G20 summit in New Delhi, which is going to happen this weekend. And we've seen that India is pushing, especially in the field of crypto regulations in the G20. And also the paper which came out in the finance track was really highlighting that. So on this backdrop, and India has put up the issue on crypto regulations on the agenda. How is the take of Europe on this, or Germany? And the so-called market in crypto asset regulation is a front rider role in the regulation of new fintech business models. So what are the key aspects or the key take aspects of Germany and Europe on this approach to crypto assets, which has been also highly discussed here in the Global Fintech Forum?
Very good question, indeed. Yes, I got the impression that crypto is one of the hottest topics to discuss recently in the financial market area, and we welcome very much that India put this topic on the G20 agenda. So we do see and we do have to acknowledge that crypto is a global topic. And we do see that the ongoing work of the G20 standard setting bodies, and Mr. Wuermeling mentioned them already, the FSB, for example, as well as the FATF, the AML watchdog, and the IMF are doing a very good job and are working on the issues for already quite a while. And I think that's the best, the place where to discuss these issues. Having said that, we in Germany have quite already gained some experiences with the regulation of crypto, since we have a regulatory regime for more than 2 years by now, and with the so-called MiCA regulation, the European regulation on markets and crypto assets, we are now getting a European harmonized regulation for crypto, which enables crypto asset provider to operate under this regulatory umbrella in the European Union. And just to outline the main principles this regulation is based on, it's a principle Mr. Wuermeling mentioned in his keynote. It's same business, same risks, same rules. What does it mean in detail? In detail is meant if you're having crypto securities, you're treated like a security provider. If your crypto token is e-money, it's treated like an e-money provider. And if your crypto token falls in neither of these categories, then we have MiCA as a backup for all cryptos which are not regulated by existing regulation. And this regulation, as all financial market regulation, has the aim to address risks for financial stability and market integrity, including AML risks, and of course consumer protection issues. In concrete, that means that as a crypto service provider, you fall under a licensing regime, you're supervised by our financial watchdog, and you have to have some prudential and other requirements you have to meet. The idea behind this, as I mentioned at the beginning, is that we treat similar things similar, and where we do see new risks which are not yet covered by existing regulation, we try to adapt in a timely manner. And so we're quite encouraged by MiCA. MiCA is entering into force next year. In Germany, one of the challenges we are now working on is to implement the MiCA system in our existing regulatory system. We are on a very good way there. However, we also see that the market and the change, technological change is not waiting for regulators, and we already see new topics coming on the table in the field of crypto, which we also need to deal with on international level and on a European level. And just to mention one would be probably crypto lending. However, since the international work and the European work on this issue is, I think, very promising, I'm very convinced that we will find good solutions there too.
Yeah, thanks so much. Thanks to the panelists for their answers and the engaging discussions. Maybe to sum it up, the markets are not waiting for regulations. That's what you just said. I think we have to take that forward. If we talk about Germany, I think we should have in mind, and that came out clear of the statements and also of the keynote address, that we look at Europe, and there's quite a unified framework and regulator setting ongoing in Europe already, so you get access to not just Germany, you get access to Europe. But I think it's also important to highlight that we have to learn from each other, and that was also mentioned in the special address by Dr. Wormeling. I think it's important to look in both of the systems, India and Germany, to build an Indo-German corridor. We can learn a lot from India as Germany. I think India can also a lot from Germany, but international cooperation is essential. And be it on a very high level, be it on the policy level, be it on the level of companies or startups, but I think we should always bear in mind that there are opportunities open out there, and that the global approach and international cooperation is key also for avoiding risks, and setting common standards is really, really important in international cooperation. So I thank you all for the wonderful discussion here on the panel, and thank the audience for the patience, and I wish us all a good afternoon.
Thank you so much.